Are you tired of your savings just sitting there? Want to make your money work harder for you? So in this video, you learn how to maximize your savings potential and grow your wealth. So stay tuned for tips and tricks to boost your savings. So first of all, you don't want to take risks with your savings. But why should you hold onto your savings? Savings are good for unexpected expenses and financial emergencies like medical bills, car repairs, or loss of income. Having savings can help reduce financial stress and give you peace of mind. And that's really important. So the amount you keep on hand varies for everyone. But one of the most important lessons I have learned from wealthy people is to make money work harder for you. One of the key factors is the power of compound interest, which can make a big difference in your end wealth. Do you know the difference between 2% interest or 5% over a period of 20 years? So let's break this down, because if you get this, you will be a much smarter investor. So if you invest, for example, $1,000 at an interest rate of 2% annually, after 20 years, your investment will grow to approximately $1,500. But if you invest the same amount, $1,000, at 5% interest rate annually, after 20 years, your investment will grow to approximately $2,600. Do you see how much of a difference this can make for your money? With some easy decisions, you can double your money in a period of almost 20 years. And for the same reason, you want to pay off your debts and all loans with high interest rates first. These could be credit card loans which charge high interest rates. So make a plan today for yourself on how to pay these off as quickly as possible or refinance them at a lower interest rate. Even if you don't want to do that and you feel a little resistance inside, trust me that this will help you make smarter decisions fast. Because the people who take action are the people who will be financial free the quickest. And the difference? People with money have a game plan. You only have to be creative. So, for example, you could take out equity from your house at a lower interest rate than the loan you have with a credit card company. This could save you a lot of money. Secondly, and this is an important lesson and a dumb mistake I made myself, and it goes like this. Because I kept tax money, I still had to pay on my separate account. But at the time, crypto started to take off. And there's a reason for the saying, only take risk with money you can afford to lose. But I didn't listen and I was really stubborn. So I invested the money in a specific crypto that turned out to be worthless. Well, I still had to pay my taxes. You know, I was too greedy. A costly lesson for me. So make sure you set aside money for unexpected expenses. But what can you do with the remaining money? The amount of money you keep on hand to cover unexpected expenses varies per person. So first, it's best to look for high-yield saving accounts. Choose a saving account with a higher interest rate than an average savings account. This can help you earn more interest on your savings and make sure you stay within the deposit guarantee. So in Europe, this is usually 100,000 euros per account holder, but this varies per country. But you can get a higher return with term deposits. Term deposits, you lock your money away for a set period at a higher interest rate than with a regular saving account. The advantage is that you get a higher interest rate and you know in advance for which period you are lending out your money. But the disadvantage is that you cannot access your money in the meantime without having to pay a penalty. So this is a biggie because the same bank can then lend out your money to someone else at a higher rate. So why give the bank this opportunity when you can do it yourself? But how can you do this? That's why it makes sense to look into bonds, because investing in bonds gives you a higher return on investment. So if you are willing to take a bit more of a risk, you can consider investing some of your savings in bonds. Bonds can yield a higher return than saving accounts, but keep in mind they also come with a higher risk. But this risk is often almost as great as the risk of a deposit, only you are more flexible and you'll get a higher interest rate. So the advantage is that if the bond becomes available, you can immediately buy another bond with a click of a button. And that's really easy, without having to apply for a new saving account. But before you start, it's important to understand how a bond works. I will put a link under the video to fully understand the bond below this video. If you have any questions about your savings, please let me know. I'm here to help you out. So please take action after watching this video, because this is the only path to financial success. Take care and see you on the next video.